Equities are the difference between asset and liabilities. Shareholders' equity represents the amount of money that would be returned to shareholders if all of the assets were liquidated and all of the company's debt were paid off. The items in equity includes share capital, return earning, common stock, preferred stock, and accumulation of other income. The change of asset and liabilities over the period will affect the net value of equity. You can calculate the net value of equity often by removing liabilities from assets. Another one, which is equivalent to shareholders' equity, is retained earning. They are part of shareholders' equity and are the amount of net earnings that were not paid to shareholders as dividends. There are certain principles of calculating balance sheet which are expressed below. First one, locate total asset on the balance sheet for the period. Then locate total all liabilities, which should be a separate listing on the balance sheet. It may not include contingent liabilities. Thirdly, locate total shareholders' equity and add the number of total liabilities. And finally, we can say total assets should equal the total of liabilities and total equity. Another example of balance sheet is given to you in PDF format. Read through, and if you feel any doubt, ask me in Google Classroom comment box. Thank you. In this slide, we will talk about two financial statement. One is income statement and risk balance sheet. Two examples are given in your Google Classroom material box. And in our next slide, we will talk about three other financial statements. Thank you.